Welcome to today's market report. The pan-European STOXX 600 index rose 0.8% on Tuesday, with German DAX gaining 1.5%, France CAC 40 up 1.1%, and UK's FTSE 100 adding 0.7%. Gains in financial sectors and chemical services helped European stocks rise on Tuesday after two straight sessions of declines, with Swiss wealth manager UBS jumping after posting a surge in quarterly net profit. Chemical stocks gained the most amongst sectors as industrial gas producer Linde rose 3.7% after announcing an increase to its quarterly dividend and a $5 billion share buyback program. UBS gained 2.5% as high levels of client activity helped the world's largest wealth manager record a 137% rise in net profit. The broader financial services index was up 1.7%. Swedish buyout group EQT jumped 11.7% after it signed a deal to buy global real estate investment manager Exeter Property Group for $1.87 billion. The STOXX 600 tumbled to a two-week low on Monday after data painted a gloomy picture of the European economy in January, as many countries tightened curbs to combat new variants of the coronavirus. The numbers that are coming out show economic activity in Europe is falling back and underperforming other parts of the world. So far, investors are prepared to look through the current difficulties on the basis that the second half will be better. Italy's FTSE MIB rose 0.8%, with Prime Minister Giuseppe Conte set to resign later in the day on hopes President Sergio Mattarella will give him a mandate to form a new government with broader backing in Parliament. This most likely scenario, in our view, remains the reappointment to Conte and a new government with a majority enlarged to groups of the centre and with the return of Italia Viva. The timing of the crisis could be rather short. Spanish pharmaceutical company PharmaMar jumped 15% after peer-reviewed General Science published a paper that confirmed its drug Plitidepsin has a potent preclinical efficacy against COVID-19. Weighing on the sector, Swiss drugmaker Novartis fell 2.8% after its fourth quarter sales and profit rose less than analysts expected. Britain's Rolls-Royce dived 9.2% to a 10-week low after it downgraded expectations for how much its engines would fly this year and warned of a big cash outflow. Oil has ignored equity nerves and a strong dollar overnight, with both Brent crude and WTI finishing the day higher. Brent was up 0.09% at 55.73. Crude was up 0.1% to $52.75 per barrel. Gold dropped 0.08% at $1,854.95 per ounce. On the FX front, the upbeat UK jobs data keeps the pound largely unfazed as GBP/USD remains pressured below 136.50, down 0.25% on the day. The Office for National Statistics showed on Tuesday the UK's official jobless rate rose to 5% in November versus the previous 4.9% and 5.1% expected, while the climate count change showed a smaller than expected increase last month. The number of people claiming jobless benefits rose by 7k in December against expectations of 35k and 38.1% seen previously. The claimant count rate came in at 7.4% versus 7.4% last. The GBP/USD pair has retreated further from 32-month tops around 137.45 region touched last week. A weaker tone around the equity markets drove some heaven flows towards the US dollar and was seen as a key factor exerting pressure on the GBP/USD pair. The global risk sentiment took a hit after German data added to worries about the economic fallout from the coronavirus pandemic. Apart from these concerns about roadblocks to the US President Joe Biden's $1.9 trillion stimulus plan, fresh bids emerged near 121.10, allowing a quick rebound in euro-dollar to test the 121.50 level, as the price now consolidates the uptick ahead of the key US economic data. The risk sentiment witnessed a major turnaround as the European equities embarked upon a recovery mode after a mixed start on the session. The US dollar edged higher on Tuesday as concerns over the timing and the size of the US stimulus weighed on market sentiment ahead of a Fed meeting. The dollar index was trading at 90.547, dollar yen was at 103.78. Aussie dollar was at 0.7675. This is today's market news. Thanks for listening. We'll see you next time.